Climate change is not only driving more extreme weather events, but the damage from more severe wildfires, hurricanes, and floods is driving up your day-to-day cost of living in ways that might surprise you. If you're one of the many people already priced out of homeownership, maybe you haven't seen firsthand how insurance premiums have been skyrocketing in the past few years. But rates aren't rising evenly for everyone, and we're seeing evidence of blatant discrimination that has more to do with your credit score than how at risk your property is. Now, I can't stress this enough. Climate costs are going to continue to rise as long as we keep fueling major disasters by burning fossil fuels and warming the planet. Since a lot of that warming has already occurred and we aren't moving off fossil fuels quickly enough, we are going to need to build climate resilience, and this means building in much safer and stronger and smarter ways to withstand growing disasters. If you've been paying premiums to your insurance company for decades and assume they have your back, I'm here to tell you there's a decent chance that right now they are not only overcharging you, but you won't be able to count on them if a climate disaster occurs. Insurance CEOs have been complaining about rising climate costs in recent years, but many insurance companies are still making a killing and have either maintained or even expanded their profits over the past 2 years. In 2025, U.S. property insurers were estimated to make nearly $60 billion in underwriting profits alone across all lines of insurance. And that's not really how insurance companies even make most of their profit. They make most of their profit by investing your premium dollars for either the amount of time until you make a claim in the year or forever if you don't make a claim that year. You might ask, how can it be that property insurers made $60 billion extra this year while climate change is causing such trouble? Well, part of the answer is that the industry now closes about 50% of claims without any payment, zero. Being able to rebuild after disaster is basically a coin flip. Also, the number of dollars paid out by property insurers for claims compared to the number of dollars paid in by people through their premiums has been dropping since the 1980s and 90s. Another part of the story is that even though climate change is raising damages, and that means premiums will have to rise to break even, many insurers are raising rates even faster than they need to on average across the country. At least that was the case in 2024 and 2025. So while regular people are struggling to pay their premiums or getting claims denied or underpaid, or getting policies non-renewed by their insurers, many of those insurers are pocketing record profits. How is this allowed, you might ask? Well, officials in your state that are supposed to stop profiteering and unfair claims practices are probably letting you down. Each state has an insurance commissioner that is supposed to protect the public from the industry, but some of them have basically no authority to actually regulate rates, and this is the legislature's fault. And even for the commissioners that do have authority, many of them just rubber stamp increases because the industry has totally captured them, and many of them will go on to take a job in the insurance industry after they leave public office. To make it worse, anytime an insurance commissioner stands up to the insurance industry in a big way, the industry quickly threatens to abandon the state, and there's no federal regulation protecting states from withdrawal. The result is that insurance rates are barely regulated in most places. Even though they are a growing burden for families, they will continue to rise for decades to come because of climate change, and insurance is a product that society requires you to buy if you ever want to own a home. Insurance isn't a nice to have, it's a requirement to get a mortgage. The good news is there are things that state insurance commissioners and state legislators can do to finally tackle insurance profiteering and unfair claims practices, but these things are not being done in most cases. The Equitable and Just Insurance Initiative has a new guide you can find in the link below that lays out a 7-point plan that will lower the rate increases in your state if your officials follow it. Some things are simple. First, states should actually cap the profits they let insurers take. And as New York Governor Hochul recently proposed, commissioners should take a close look at insurers that have posted significant profits in multiple years in a row. That means they are probably overpricing during that time period. Also, look at all the extra line items insurers claim they are spending money on besides payouts to consumers. Does anybody really think it makes sense for every other TV commercial to feature insurance companies where you basically can't tell the difference between them? That money could be going towards homeowners that just experienced a disaster. Second, stop discrimination. Insurers have long used credit scores to charge higher rates for lower income people and communities, even though insurance is not like a mortgage where they need to predict repayment odds over 30 years. If an insurance policy is not paid in a given year, it's simply canceled and the homeowner is not covered. So credit score doesn't predict anything. It just offers a way to extract more money from lower income people and communities of color. A recent report by the Consumer Federation of America found that homeowners with lower credit scores were penalized by nearly 200% in Pennsylvania. This means a homeowner might pay thousands of dollars more every year than their neighbor in an identical home, even though their risk of facing a disaster is exactly the same. This practice is extractive, it's racist, and it's only banned in 3 states right now. Next, we need to recognize that climate change is here to stay. It's going to get worse, and disaster costs are going to keep rising for decades. Insurers can actually help to avoid some of these costs if they start offering insurance premium discounts and helping homeowners pay for upgrades to their homes that lower their risk level. Things like stronger roofs, flood proofing, and clearing brush around your house need to be rewarded with lower insurance rates and guarantees from insurers that they will continue offering coverage. Finally, we need insurers to stop making the situation worse by investing in and insuring fossil fuels, which are driving up climate-related losses. For the last 40 years, at least, insurers have known that their fossil fuel investments and insurance coverage would make it much harder to insure homeowners in the future, and that future is now here. The reason insurers haven't cared too much is because they always knew they could simply leave town or leave the state if the risk got too high. Insurers must stop feeding this destructive cycle, and your insurance commissioner and state legislators can make that happen.